Tobin Smith here. Todd is not here. I'm hosting the show, so we're going to do it my way. And I brought two of the best people I know to figure this dadgum market out. Matt Totty, I've known for a long time. There's many stories that I cannot tell, but he is one of the best timers I've known for a long time. And JC Parets is now a freaking legend. I don't know what's going on, but I get notes from my subscribers, John, my subscribers saying, yeah, I followed JC Parets, and because you agreed with him, I'm going to go along this. So thanks for, helping my people out.
Happy to help. Happy to help.
All
What
right.
are we buying? What are we buying these days? What are we agreeing on?
Well, I don't know. I mean, here, let me just put the big question out here. So blah, blah, blah. Interest rates go up a little bit. The economy is stronger than the recession. I was going to say a bad word. The recession babies are looking for. So, this was a good macro day. Economics day is a bad day for the market. But I would say, as the only fundamentalist guy here, and I'm not talking about religion, that the whole concept of running, 9 weeks straight up into the end of the year and not expecting a pullback, Matt, what would you call people who are weeping that their market's down 1%? I will say, however, our portfolio is up 26% for the year so far. So take that.
Wow, congrats.
Thank you.
Act like you've been there, Tobin.
Yeah. Was it your first rodeo?
This is my first rodeo, exactly. All those shows I hosted on Fox, it was live. You couldn't make any mistakes. These ones, when I make it, we'll just stop and redo it. So keep going.
There you go. Well, when you and I have talked, when the NASDAQ was nearing that 200-day moving average a couple of months ago, before that bull run, I said, well, I got a mild signal here from my timing indicator. No heavy selling, institutional buying started to really increase following that signal that I got.
And you follow retail buying and institutional buying very closely.
Yeah, so my software tracks all stocks, all universes, all ETFs, anything that trades on any exchange, it tracks it. And then it looks for reversals on high volume. And high volume meaning that the average trade size is larger than your normal retail investor, right? So we try to separate the two. And it looks at all of those 16,000 plus instruments, and then compiles a long and short reversal indicator. And when that reversal is minus 50, then it's bullish. If it's plus 50, it's bearish, to oversimplify it.
Well, what's interesting is JC almost had the same thing at the same time when you were calling the sort of the bottom going into October as well. JC, what is your magic mojo that showed you that?
Yeah, not a lot of magic. For me, we just like to count. It's really comes down to that. People often forget it's a market of stocks. So, the S&P 500 has 503 stocks or something or whatever, right? The NASDAQ 100 has 100 stocks. The Dow's got 30, Russell 2000, right? Understanding what's driving these things. You've got 250, 260 biotechs, another 250, 260 regional banks in the Russell 2000. So if you're only looking at the Russell 2000, just understand that is being driven by a lot of these things. When you're looking at the S&P 500, 30% of that is technology. So it's important to remember that. In the Dow, healthcare is the largest representation, over 20%. So you want to understand what's driving these things. The NASDAQ 100 has no energy, no financials, no real estate, no industrials, no materials. Is the NASDAQ 100 the market? Or is it 50% technology? There's nothing wrong with that. Just understand what that is, as opposed to something like the Dow that's like 17% technology, twice the industrials exposure to the S&P 500. When you look internationally, the United Kingdom has no technology. It's things like Chile, Peru, no technology. They have different types of exposure. So understanding sort of the composition of what it is that we're analyzing, I think is really important. The new 52-week lows list peaked in June of 2022. By the time the S&P put in its low in the fourth quarter and the NASDAQ put in their low, there weren't any stocks left that were still going down. Most things were already going up, right? So it's about counting. And people who were like, oh, we're in a bear market, or oh, the market's going to crash. Like, have you counted how many stocks are going up versus going down? I doubt it. So I think it really just comes down to that. Like, have you counted or not? People are like, oh, it's only 7 stocks that are going up. I'm like, have you counted? Because it's really not only 7.
We get it. We're trying to count right now. Okay.
So that's my point.
Counting how many times you said count it, and I get it.
Nobody wants to do it. They you know, and humans like defer to the easy out, and the indexes just don't serve that. So the new highs peaked in December 14th. That was a month ago. So we're over a month into a market correction. Well deserved, to your point, by the way.
Well, I'm the fundamentalist here, and I'm the macro guy. What's sort of intriguing to me is that there's still these. So we had the pivot, right? We had the Fed pivot. Oh my gosh, and all of a sudden you looked at the futures market and it was saying that there was going to be a 50 basis point rate cut in March, and that was like 80% certainty. That came down to 45% certainty today because one governor came out and said, "Well, wait a minute." Now, that's for traders. That's for day traders. I mean, investors can't get hung up on what one Fed guy says, but you can follow, the big stuff. I asked you guys to give me like an update on what you think about Japan and Mexico. They both made, all-time highs, their markets. China, on the other hand, is in the toilet, is going nowhere. I mean, there's stuff that's having secular moves now. And to your point, JC, don't get hung up on 1 or 2 stocks. Count them all, and count China and Japan and other markets that are doing very well.
Yeah, China's not doing well at all. But what does it have to do with Brazil or Canada or Denmark?
Well, you can make the argument that before I think you were born, this China company that came around and they got out of communism and they started working on actual capitalism. And then they started making all the shirts for Walmart and everything else. And we had 18 to 20 years of disinflation because prices kept coming down because guys would work for 50 cents a day. And that's over. So that brings, prices up, brings inflation. And we sort of understand that. But I'm a sort of a sector guy. But as you know, my real business is I'm an inflection investor. I'm looking for transformative events that create inflection. And the reason why we're up 26% this year is because, I'm sorry, but AI is one of the biggest inflections of technology that I've ever seen. And I was deep into the old days of AOL. I remember interviewing this guy Steve Case from Quantum Computers, who said he was starting this AOL thing, and I was like, really? People are going to get email on an app? I mean, come on, Steve, what are you smoking over there? So my question is, Matt, and then the Spaniard is now your nickname, JC, is
I've been called worse things. Yeah,
that's true. So this is a logical comeback. Where do you see us coming back to find support in the American market? And I do look at the difference between the equal weighted QQQ and S&P 500 and the market cap weighted, because I am sort of in Kathy Wood's camp in that market weighting thing has changed the dimension of capital formation in the stock markets. But hey, to your point, it is what it is, right? So Matt,
we live in a market cap weighted world, Toby.
Yeah, that's right, exactly.
So to recap and agree with JC, we track every single stock. We don't track indices. So we know as a whole when things should move up or move down. And then it's up to you to really find those hot sectors if you're trading on a daily or weekly or monthly basis longer. Personally, I trade futures intraday. So my scope is narrowed down to a very small piece. But I will say this, I track the daily and weekly because really that's important. I want to make sure I'm in the right general direction of the trend. So on December 20th, we got a top signal. Normally 50 is bearish. It was 90. Oh, so wow. That told us that institutions were piling out at an alarming number. Now, does that mean that it's a bear market following that? Absolutely not. There's a lot of catalysts. There was year end, there's window dressing, there's all those things, right?
The algorithmic trading on that day was like 84% of all trades were algorithmic. You know, in other words, robot momentum reversals.
Yeah, it's crazy. So we did see the market drift back up slightly above that day, and the volume was pretty light. So now we've had that pullback that we were looking for.
When's it going to end, Matt? I don't care about your futures contracts.
Okay, all right. So now we're in a consolidation. We're creating a flag on a technical basis, and we are putting in a bottom here. I think that it's significant enough to hold probably 465 on the S&P, on the SPY is significant. And then hopefully we should see a push to a new high. On a long-term basis, we're still in a bull market. The momentum is still there. The institutions are not selling at the high here. That selling was all lower sized average trades. So it was all retail.
465 on the SPY?
On the SPYs, yeah, with the breakout above 479.
All right, JC.
It's basically a new high, yeah.
Bring it, boy.
Yeah, I mean, listen, I think we're 18 months into a bull market. We continue to see sector rotation. The laggers are catching up to the leaders. It hasn't been the opposite where the leaders catch down to the laggers. It's like the leaders keep leading and the laggers catch up. I mean, that's what we've seen. That's on both a cap weighted and on an equally weighted basis, right? To your point, Toby. Yes, we live in a market cap weighted world. Yes, Amazon deserves probably to be 25% of consumer discretionary, you know, right? Yeah. Like that probably is about
right. At our house. I built a tree house for the Amazon guy just so we can like take a nap.
No question. But I also think that there's value in looking at the equally weighted indexes as well. It's two different perspectives. It's not that one's better than the other. You're just getting a different look. And again, consumer discretionary on an equally weighted basis has been one of the biggest winners. So is technology. So have industrials. And historically, early on in bull markets, what are the leading sectors? It's technology, industrials, and consumer discretionary. So this time is no different. Also, I want to point you to the breadth thrusts that we saw in December, where you had the most amount of new highs.
Wait a minute, can you say that in television? Breadth thrusts?
Yeah, take your head out of the gutter. We're talking about the stock market here, Toby.
Okay.
So relax, all right? Settle down. Have another glass of wine. You know, let's ease into that. All right.
Okay. My bad. Unscrew you, JC. Unscrew you. I apologize.
Listen, the market is like sex. It's always best right before it ends. Right.
Oh.
I think that was Warren Buffett.
Got a winner there, Todd. I'm sorry.
Oh man, you just took it to a whole new level, JC.
Listen,
that's well rehearsed, though, Matt Totty. Let me tell you, that's well rehearsed. That's not the first time he's thrown that bomb out.
So it was Warren Buffett who said that, by the way. So in what we saw in December was the most amount of new highs. We call them a breadth thrust because we're seeing just a relentless amount of buying pressure. You know,
but
you have
across the sectors, other than
across the sectors. Individual stocks is what I'm referring to specifically. But you'll also see at the sector level. You'll see at the country level. And historically, when you see that sort of behavior, it's very early cycle. Now, in the very short term, it tends to lead
early stock market cycle or early economic cycle?
Early stock market. Nobody cares about the economy. The stock market is a lead.
I'm sorry.
Hold on, Toby. We're talking about making money in.
Onerous thing. It's just
we want to make money in the market, and we know for a fact that the market is a leading indicator and it's a discounting mechanism for the economy. So why are we going to waste our time with all this economic stuff when we got the leading indicator right in front of us? So the economy will come.
Don't make me cry, man. Don't make me cry. I've worked a long time at this.
The economy will come later. Don't worry. Nobody said it's worthless. It's, in my opinion, less important than the forward-looking information that's going to tell us what the economy is going to do. Right? We're here to make money, and the leading indicator has continued to suggest breadth expansion, right? And to such a level that is rarely seen. So again, early in multi-year cycles, which is economic, to your point, right? Yeah. Joking aside, yes, economic cycle for sure. But in the short term, in the very near term, it does tend to lead to some pressure. Go back and look. You saw it in the spring of 2020, some short-term pressure. And we've seen that. But when you zoom out, that's early cycle stuff. So, you know, we think that we're in the early stages. The first quarter of presidential election years tends to not be great. This one's no different. So, but the back half of the election years tend to be great. you know, and we've been following that election cycle like to a T, right? Last year, ups and downs to a T. You buy the midterm elections, that certainly happened. Correction in the third quarter, ripper into the end of the year, like, you know, to a T following that. So I'm not saying it's going to work out exactly like that, but it would be strange if it didn't. Actually,
well, you know,
right?
we've had Jeff Hirsch and Sam Stovall, you know, two of the biggest historians I think out there. That's how old I am. I was on the I was on the floor with Sam Stovall's dad, Hirsch's dad, Yale, and Sam Stovall's dad. So, you know, those guys have been around a long time.
I'm not old enough to have those stories.
Yeah, no, well, you know, I got to pull some rank here somehow. All right, so 465.
Again, that's short term. I want to touch a little bit about what JC said.
Matt, we're going to take a break. I want you to hold your thunder. All you know, when I first met Matt, it was in Mongolia, China, or actually Mongolia, not part of China. And he had not spent as much time on the coast as he has now. He's got a little twang going on there. I like it now. Now you're a homeboy. We'll be right back. We're going to talk about the 465, the number. We're talking about sectors. We're going to talk about why my AI stocks are up 26%. And we'll be back.
Ready to up your game and learn more about the thrilling world of sports betting? Introducing Double Down with Breslow, the ultimate podcast about the business of sports gambling. Join me, James Breslow, and a long list of expert guests as we dive into the art and science of the sports betting industry. Evolving regulations, technology enhancements, and the meteoric rise in the number of players makes this sector the fastest growing and most intriguing in the world. Unlock the business secrets from many of the industry's most recognizable C-suite executives, including famous odds makers and influencers. Every episode of Double Down with Breslow is packed with insider tips, deeply skilled analysis, and in-depth discussions. Don't miss out on the ultimate resource for mastering the business of sports betting. Listen to Double Down with Breslow on the Evergreen Podcast Network or wherever you listen to podcasts. That's Double Down with Breslow, the business of sports betting podcast.
And we are back with Matt Totty, the king of the Caribbean Ocean. No, I'm sorry, the Gulf of Mexico. Casey Parets, the multilingual analyst. I'd love to see you do Bovestra radio. Do you ever do any radio for the market?
Well, they speak Portuguese there. It's a different language. I speak Spanish. So
Portuguese too.
Yeah, I don't. Portuguese might sound like Spanish, but it might as well be Mandarin. I got nothing in Portuguese, not even close. By the way, I got Portuguese Fish Market right around the corner from me. It's fantastic. No, but I did give a presentation. I think it was in Venezuela once, in Spanish. That was cool. Wow. The one time I did análisis técnico. Sorry.
Órala pues, vato. All right.
Hey now, look at that. It's more of like a Mexican twang. Right?
And in Portugal, it's muy malo. As in, like in Spanish, it's izquierda, right? To make a left turn.
Yes, yes.
It's like izquierda.
And the Cubans don't call each other vato. That's a Mexican thing.
That's right. That's well, I grew up in Southern California, vato loco. So.
You know. My buddy's Puerto Rican. And he lives in San Diego. He's got a Mexican accent. All his Puerto Rican friends make fun of him.
Yeah, he does. Well, I was in the day when the Mexican gangs would go against like the poor white guys next to our locker and like surround us and like shake us down for lunch money. And the entire football team that I played on, our entire job at halftime during the school day was to go help people and kick butt on those gangbangers because they look really bad until you actually hit them, and then they feel like rocks. That has nothing to do with the stock market. But
are we buying Mexico? EWW, you like it, Toby?
You kidding me? You know, John Layfield is one of my best friends. So yeah, I when John was the world champion of WWE wrestling, JBL.
I'm talking about the ETF. I'm talking about the Mexico ETF.
Oh yeah, I thought you were talking about WWE. All right, we'll go back.
How are you getting so far off track here?
Bring it back, Toby. Bring it back.
That's how I roll. All right. So I asked you guys before on Japan. I'm sorry, Japan and Mexico. They're both hitting all-time highs. Japan has absolutely had an economic transformation. Again, I remember when they peaked out in 1984 or 1986, and the palace in Tokyo was worth more than all of California real estate, right?
It was the
They
park. It was that
Yeah.
park in Tokyo.
Yeah, park. They had a little.
I've been. It's a nice park, but all of California, I don't know. It's a little aggressive.
Yeah, it was a little aggressive. So anyway, what do you think, Matt? Do you have any Japan or Mexico? Because Mexico is the new onshoring capital of the world.
Yeah, so I do go there occasionally for vacation. Love Cabo and other areas, and of course, being in the Gulf of Mexico, I'm a very short flight.
I'm talking about the stock market you bonehead.
Oh, okay. I do not follow the Mexican stock market whatsoever. I do follow the Japanese yen though, and right now that's getting beat up pretty hard. And from a technical perspective, there is no institutional buying coming in at these lows. So for the short term, foreseeable future, it looks like it's going down.
Well, you just answered the question of why the stock market's going up, because the currency exchange is juicing the earnings per share of these Japanese companies when they take the dollars and repatriate it in the yen. Now, Parets, do you follow Japan indexes or any outside?
Of course, we follow every country around the world, and I think Japan. I mean, obviously, it was a tremendous leading indicator. Is one of the first ones to be breaking out around the world when other things were not. You look at the Wisdom Tree ETF DXJ, which is pricing Japan in local currency. So that DXJ was making new all-time highs before anything else was. That was a great leading indicator. As far as the Nikkei goes, I think we go back to those all-time highs from '89 that you were talking about. And that's still like 10% away. That's not nothing. So I think it's still got legs to head up there. As far as the currency, if you want to eliminate the currency aspect of it, you can have a 50% EWJ, 50% DXJ position if you want to be long Japan without the currency risk.
I love it.
That's one way to do it, right? I'm not saying there's no right or wrong way to do it, but there's a lot of different ways to participate for sure. Look at Toyota Motor. That stock continues to act really, really well. Let's remember that Japan has a ton of industrials in that particular segment. So just kind of reiterating the strength that we've seen in the United States and Canada for that matter, and Europe when it comes to industrial stocks. You're also seeing that as a driver in Japan. So there's a common theme where even if you're not going to invest in Japan, if you understand what's driving Japanese equities, you could bring that theme to the United States, something closer to home if you want. If you don't want to own a Japanese ADR or an ETF, and maybe you want to own, some engineering manufacturing company out of Ohio or something, right?
Well, I mean, let's look at Toyota. I mean, first off, you've been to Japan. I've been to Japan. Matt's been to Japan. They have these things called chaebols, which are basically these giant conglomerate like they have in Korea, same sort of dealio. Toyota came out and said, you know what? We're just going to make hybrid vehicles. We're not going to make EVs because nobody wants these freaking EVs. And they're making them in Korea and they're making them in Japan. And then I just was out looking at new SUVs last week. Every one of the SUVs at the Toyota dealership here in Scottsdale are hybrids. They got rid of their plug-in and they're selling like hotcakes. They have like a 3-day inventory and they're just getting sold out. So I'm long Toyota as essentially the anti-Tesla play. When Hertz dropped 20,000 EVs, whenever I rent a car, I always like to rent the EV car because it's just so fun to drive. But Lord help you if you have to recharge that thing.
It's funny, Toby, you mentioned Tesla. Tesla's been a mess for years. We actually put on an iron condor today. So we sold the wings and hedged ourselves on the outside, but we're betting that Tesla continues to remain messy, essentially, is the way the trade works.
So for those of you at home that don't understand what JC's saying, that's a structured trade where he's using options, selling and buying. And it looks sort of like a condor when you put it on a spreadsheet. But I'm totally with you. I mean, I think the first show I ever did for Fox Business back in 2009, that was like the day before the Tesla IPO. And for my subscribers, we were long it going into it and we held it for a long time. And yeah, I sold a little bit too early. You know how when somebody says a little bit too early, like 2 years too early. But but it became a cult stock, and I don't know how to analyze a cult stock. It's like Kathy Woods.
You analyze a cold stock the same you would a stock that nobody cares about.
It's the little pointy directions and the volume.
It's just supply and demand. If there's more buyers and sellers, price go up. That's it.
Yeah.
Okay, well, I don't can't stand it. You're that young and you're smarter than me. Matt, did you ever mess up Tesla?
I got in for maybe a 40-50% ride from a technical perspective. And that was about halfway through its big move. So I didn't catch it early. I caught it midway through and got out early. But anytime it's down below 200, I'm a long-term buyer.
Yeah, I think it's a good call. It's interesting. Yeah. I've never been in a stock where the chairman and majority owners was selling 25% of his stock to buy Twitter. It's sort of hard to. And the market makers that I know were saying, I am choking on Tesla stock. I cannot, this inventory I'm holding. So I knew that they were blowing it out. So that's why I got up. I got a little bit too early. That's okay. All right. So let's talk stocks.
It's probably going to have another run just based off of their, automated technology and also the truck. The truck.
Our bet is just not that it's not happening anytime soon.
Yeah.
I agree with that. No. I just hope it doesn't happen yet.
We got a cocktail. Yeah. We got a cocktail at Del Frisco's. JC, he's short. Matt, you're going to buy under $200 because this is getting there quick.
What am I short? Hold on. What am I short? I'm short.
I thought you were short Tesla. I thought you're short.
No. We got put on an iron condor, so we're just betting that it stays sideways for the next couple months.
All right.
Yeah, and that's probably a safe bet. Absolutely. But this is, I think, a 5-year hold on Tesla for me, and I rarely buy things long term. But this truck is making a huge impact. And there's 1 million deposits already. And
I know there are. Have you seen the truck?
Yeah.
Yeah.
It's awesome.
We have one out here at the Tesla dealership.
Yeah.
Let's just say.
How much are they? Are they expensive or no?
Well, when you actually, they're only making like the jacked up one with all the cool stuff. So they're like 69,000 to 82,000.
That's not bad. That's less than I got a GMC because I got too many kids. The GMC is a lot more than that. That's not bad, man.
Well, the thing is, you either love it or hate it at just the look. I don't think there's anything in between. I'm a little avant-garde. I don't mind, but if I got in that car and I got out, people would laugh at me. It would be hurtful.
What do they do when you get out of your car now? They're not laughing?
They're saying, you know what? For an old guy, that freaking Tesla you got rocks.
Look at that guy. That's funny. So you have a Tesla? You like it?
I love them.
Nice.
I love them. But I don't drive. I have another car, and if we're actually going someplace, we'll take that car because nobody wants to. The worst one in the world was like coming. I'm originally from California. I have fans and family out there, so we'll drive out to California from Scottsdale and come back. There's one of their superchargers about 45 miles out of Phoenix. When you start getting close to it, you start seeing the sign that says, "Go back, go back." There's 100 cars here charging in line.
Oh,
that takes a lot of fun out of driving your Tesla, or in my case, not driving it because I'm totally into the auto drive when you get on the freeway.
Oh man, that's scary, dude. That's scary.
No, it's better than me. Trust me. But
Do they have that for the stock market? Get like a Tesla to trade for us,
Hey, hang on for a second there, because I one of my big winners is a company called Versus AI. Its ticker symbol is VRSSF. And they are introducing at Davos right now their essentially artificial general intelligence, meaning that their software gives the ability for a machine to be sentient, to make decisions. And right now I'm like beta testing the stock side of it, sectors and stocks. And it is pretty amazing in that it's garbage in, garbage out. But to your point, JC, it gets everything, and it's lining up, sort of winners. And again, part of our 26% up for the year is number one. I've been using it on small limitations. But the other side I want to get to is AI stocks, because I'm of the belief being older than both of you shits together, that the internet was fine and it did a lot of things, but I can tell you, I'm in the research business and I'm in the writing business, et cetera. And it blows me away. I mean, if there was no barred Google.com, I would lose 2 hours a day. And when you're going back historically, saying what was the discount rate at the Fed window on October 31, 2000, or 1981, when things were, boom, you got it. So in jobs, for instance, in law, the Versus AI is with the largest law firm in the world, Denton's, 186 countries, and they are working on one project, which is to translate law briefs into all these different languages, because they have 50 or more lawyers in that firm of, I don't know, God knows, 20,000, who just do legal transference, just doing translations. Those people are 350, 400 grand a year. And they've already cut out something like $25 million of overhead. Wow. Mind-boggling. Another company that uses this Versus software is NRI, the largest logistics company. Did you boys know that logistics makes up about 10% of the entire GDP of the United States? Yeah, it makes about 12.5% of Germany, for instance. Anyway, so I don't know if you ever worked in a warehouse, but I have. And in a warehouse, they call you a picker. By the way, that's rough. I've been called other bad names, but on the floor, you're a picker. The problem is, it takes you about 6 months to learn where all this stuff is. And then after 6 months, you quit because you can't stand it. So with this AI system, it in real time, 24/7, et cetera, guides these pickers to the point where it's actually fun because they get done in half the time. It's about 50% reduction in the time. And the quit ratio for the last year of the big test they did, it's like 10% of people quit. Normally it's 50%. So take those two examples and then think about what inferential AI, JC, could do for your stuff, or Matt, for your stuff, to take a load off of what you're doing.
You were supposed to introduce me to that company. What happened to that? I want to combine my algorithms with their AI.
We'll make that happen. I've been a little busy, but we're going to make that happen.
Yeah, I mean, listen, Toby, I've been able to see it. My company was acquired by an AI company, so I've had kind of like a front row seat over the last couple of years working directly with fintech, helping banks and finance specifically on the AI side. And I mean, it really is fascinating. I have some friends that are investors in some private companies, et cetera, et cetera. For me as a trader and an investor in public markets, what I can control, Microsoft, Google, NVIDIA, that seems to be where the money's going. The pure play stocks seems harder, messier. The winner, the bigger, keep on getting bigger is the trade that we've been on.
Hold that thought. We're gonna end here for this segment, but forget about Todd. We're gonna do another segment. And when we come back, I just need to get another soda and look at my AI positions. Anyway, we'll be right back. Stay with us.
Ready to up your game and learn more about the thrilling world of sports betting? Introducing Double Down with Breslow, the ultimate podcast about the business of sports gambling. Join me, James Breslow, and a long list of expert guests as we dive into the art and science of the sports betting industry. Evolving regulations, technology enhancements, and the meteoric rise in the number of players makes this sector the fastest growing and most intriguing in the world. Unlock the business secrets from many of the industry's most recognizable C-suite executives, including famous odds makers and influencers. Every episode of Double Down with Breslow is packed with insider tips, deeply skilled analysis, and in-depth discussions. Don't miss out on the ultimate resource for mastering the business of sports betting. Listen to Double Down with Breslow on the Evergreen Podcast Network or wherever you listen to podcasts. That's Double Down with Breslow, the business of sports betting podcast.
Hey, Tobin Smith. Well, I'm here with Matt Totty. I'm here with JC Parets. We're going to talk some AI stocks. And Matt, you were saying something in the break that was intriguing to me, and I think to our listeners at home, about how people screw up when stocks get really strong. They get afraid and they sell them too early. All the stocks I gave you guys to look at, they're all really strong, aren't they?
Yeah, it's amazing. And just a simple nugget for retail investors, and this might help you make some money actually using indicators. The stochastics indicator, for example, or RSI, when you see those get extremely overbought, most retail people are selling into that.
Is that
Or
when it
if
gets red? It's above the line, and so
yeah, if it's above 80 or 70, whatever
70,
your mark
right.
is, but let's say it's, but they're limited. Lane invented it as a bound momentum indicator, not to trade it oversold or overbought. But that's the way most retail investors
people
use
use it. Sure.
What they should be looking at is when it's pegged against that 100 mark, between 90 and 100. And that's really showing you the momentum in the market, and the opposite if it's down below 20 and pegging there. So if you just look at that perspective, you'll notice that the oscillator, if you're in a really strong trend, the oscillator will keep bouncing above oversold. It will never reach oversold, but it'll keep going into overbought, overbought, overbought. And that's a good indicator of a strong trend. So I looked at that group of stocks, half a dozen to a dozen stocks you sent me, and every one of those were pegged between 90 and 100.
Yeah.
Every one of them. I mean, it's amazing the momentum in that whole AI sector.
You got anything to throw in on that? Because that's a very interesting point, Matt.
I agree wholeheartedly. I think a lot of these technical analysis books and stuff like that focus a lot on mean reversion when we know asset prices trend. So if you're constantly looking for mean reversion, you're defeating the entire purpose of what we're trying to do in the first place.
Yeah,
there's a time and a place.
Yeah, you get
listen. Yeah, I mean, listen, if you're always fighting trends, you're going to be angry a lot, because
Yes.
you're going to, that's no good. So a good way to help confirm the direction of a trend, if price isn't enough, it should be, but additional supplement, I do find value in momentum, a far second from price itself. I think Matt would agree. I think that you can really see in the weight of the evidence, looking at market breadth, then momentum will sort of confirm a lot of that. RSI, the way he described it, is spot on.
All right, so I'm going to get to it in a second. We were talking about, PANW and Arista Networks and NVIDIA and AMD and SMCI and Marvell and so on and so forth. We own these not from a technical standpoint, but just from a structural standpoint, because once the AI genie got out of the bottle, we talked to a lot of CEOs and stuff, and they just can't quite get their head around it, but they know if they screw this up, that they're going to screw up their company, they're going to screw up their division, they're going to fall backwards. So they are putting the foot to the metal. And as you know, you can only make so many NVIDIA chips because they come out of Taiwan Semiconductor, and AMD can only make so many. So there's a supply-demand imbalance, which is what at Transformity Research we're looking for. We're looking for an inflection of demand or an inflection of pricing power. And now they have an inflection of demand and an inflection of pricing power, which is sort of hard to beat. But to your point, when would you sell, Matt and JC? What's the one it would make you sell, Arista Networks or AMD or NVIDIA?
When our targets are hit.
And your targets are based on what?
So when we're making new all-time highs, we have projections, using a variety of calculations. So we're arriving at 720 for NVIDIA. So we'll be selling there. From a risk management standpoint, it's always been 500. That was the breakout level from that consolidation we had since the summer. So if you're above 500, the risk has been up, as the market is proving. You're going to see some of those other areas. NVIDIA was the cleanest, in my opinion, of all of those. And what I mean by clean is what would the market have to do to prove that I'm wrong? That was easiest defined in NVIDIA. Doesn't make it better or worse than the others. It was just best for me.
Yeah. Well, also interesting, that I think people missed was that because of that huge cash flow going almost all to the bottom line, because it's all incremental new sales, their actual forward PE today is 24.5. The overall market's 22. So how could you say, well, gosh, I'm not going to add any more NVIDIA, or I'm going to sell it because it's overpriced? Well, if NVIDIA is overpriced, going to grow 75% of their earnings year over year, locked in, already sold. Nice knowing you.
The joke amongst my fundamental friends that I get to eavesdrop on is that the price of the stock keeps going up, but NVIDIA keeps getting cheaper.
Right.
Yeah.
I mean, on a forward price earnings ratio.
Look,
That's
there's-
funny to
there's
me
no-
as a technician, you know?
No doubt. I mean, I
You got to work on
started
your
as,
sense of humor, Perez. All right, Matt. What's
no,
your
I started, working with William O'Neill, it's institutional research department, and the Can Slim philosophy. Earnings growth is king. Timing helps, but if they're growing and they're trading at a discount to their P, or if their PE is at a discount to the growth rate, then it's a no-brainer. I mean, generally. And you wait for deceleration of earnings if you're a fundamental investor.
Right. I mean, irrespective of another pandemic or, a World War III or China invading Taiwan, which, by the way, as we all know now, that type of risk is in the world today. And so, all the fundamentals, but all the technicals in the world, there's going to be occasionally stuff that happens, which is why people should not be on margin going into, these type of things and risking, et cetera. That's just my little philosophy. But gentlemen, awesome. We'll of course have you back. Any final words though, Matt? I mean, I'm sorry, what's the number? 885? Sorry.
You're talking about S&P?
Yeah,
We're
S&P.
65 on the SPY. But look, then again, this is short term. I'm shorter term. The long-term trend is still intact. And the momentum is there. My of course, tech is my number one pick, but I think we should be looking at the Russell. We should be looking at those regional banks too, because I think they're going to have probably a breakout, second, third quarter of this year.
If the Fed starts cutting rates, they already had a nice run, 20% or so in the last quarter when rates started coming down. JC, final thing I'm gonna have to buy.
Yeah,
I'm gonna hold it against you next time you come on.
Listen, it's the defensive areas like consumer staples. We haven't seen relative rotation into staples. You start to see consumer staples outpacing the S&P, getting back above those late 21 lows, that relative ratio, that would be number one. Same thing with low volatility stocks, and credit spreads haven't been widening at all, as narrow as they've been. That is kind of like the missing component from a deeper correction. You're getting some dollar strength. Well, I'd be watching these emerging market currencies. They've been a great tell for the dollar. If these emerging market currencies are getting whacked, that's not good for most stocks. So look for these things to start picking up again and the dollars start to come off. If you're a stock market bull, you don't necessarily want a weaker dollar. You need a weaker dollar.
Yeah, you need a weaker dollar because the earnings that come back from these, multinationals get discounted back from the euro or the yen to the U.S. dollar. And if the dollar's higher than what was sold in the currency, you're going to have less earnings. There's no question.
I don't know about all that, but it is the only defensive asset. It's not the U.S. Treasury bond market. Treasury bonds are trading with risk assets. So the defensive asset is the dollar. So dollar strength means not so good for stocks.
All right, brothers, you guys are way, way, way smarter than I am. I just enjoy, hearing two different perspectives getting to the same place. That is pretty cool.
Steaks at Del Frisco's when you're in New York. Let me know.
Del Frisco's, for sure.
I love that place.
Number 8 it says Tobin Smith on the back. I don't know if you know that. So next time you're there, look for the name.
JC, I see the same thing as you on the consumer staples. That was my third. So
okay.
I totally agree with you.
All right. Well, let's buy, hold, sell, baby. You don't get talent like this on that freaking CNB, whatever the hell that thing is. Even though I know Jason's on it all the time. But welcome, thank you. We'll be back probably tomorrow. So from everybody, buy, sell, hold. Bye-bye. Stay long.
Buy, hold, sell, brought to you by CrossCheck Management.
I want you to smash that like button.